Thank you very much for coming. My name is Darren from HEJ.tax. I'm a tax advisor, and this is?
My name is Michael Dye. I'm a U.S. immigration lawyer, and we're based primarily in California. We have an office here in Dubai as well. I'm back and forth every month, and so we handle all U.S. immigration.
And then our team would help with pre-immigration tax planning, and then once you actually make the move, compliance to actually doing the tax returns in the U.S. and any other jurisdictions to which you may be exposed.
If you want to invest in the U.S. and go to the United States, I would say there's three different options that are the most popular way to do that. The first is called EB-5, which we spoke about. It's the employment-based category where you invest a substantial amount of money into generally it's a project, and you're loaning that money for 5 to 7 years. With that, you get a green card. The other two most common ways are, it's called an L1 visa, which is a non-immigrant visa for transferees. So if you have a company, say here in Dubai, and you want to set up a related company in the US, like a branch, subsidiary, affiliate, you can then transfer yourself over to the US to get that new office up and running. There's no minimum investment required, but you do need to set up an entity in the US. You need to have an office, get a business plan, things like that. And it's a serious visa in the US. I know other countries, you can just set up a company and you can get a visa. US, it is serious. I mean, they want to see that the business is real and that through time it will grow. But that's a very popular option. The other option is called an E2, and that's a treaty investor visa. It's a non-immigrant visa, and where you invest, quote, a substantial amount of money in a company you're going to develop and direct. Usually substantial means, you know, we've been doing this for more than 15 years. I would say if you're over 200,000 to 250, you're on pretty solid ground most of the time. People can invest in anything. There's no restrictions. We see a lot of E2 visas in small businesses. Restaurants are very popular. Franchises, retail outlets, really anything. There isn't any restriction. So the one catch for that visa is that I mentioned it's called treaty investor visa. So it's based on a treaty of trade between the United States and that other country. And that treaty allows for people to access this visa. But there's only about 80 countries that can do that. UAE is not one of them if you're a national from here. But of course, this is a melting pot of people from many different places. So we do a lot of E2s here. Pakistan is a country that can access that treaty. You mentioned Singapore can access the treaty. So many different countries around the world can. So if you come from one of those countries, and we'd be happy to send you that list and we can talk to you about that. It's a great option. So you're talking about EB-5. And so for EB-5, there's two ways to do that. There's an EB-5 regional center investment and an EB-5 direct. EB-5 regional center investment is a minimum $800,000 investment into a government designated regional center project. These are projects located all throughout the United States, generally large hotels or commercial residential properties where you're pooling your money with other EB-5 investors from all around the world to build these large projects. And how it works is you're generally loaning money to the developer or to the project to build this thing. And the loan terms are for, I would say nowadays, at least 5 years, 5 to 7 year term, and then your money is returned to you. You have a green card. The big things to keep in mind are minimum 800K, 5 to 7 years, and your investment must create at least 10 full-time jobs for US workers. And so how we designate that is we work with the regional center to get that data from the project. And without going into too much detail, it's based on job creation methodology that the US government has approved. And basically how they look at this is that if you invest X number of dollars to build this large project, it's going to create X number of jobs. And they use indirect job creation calculations to determine, because when you make these large projects, you're bringing in caterers, you're bringing in building supply makers. I mean, all these things are creating jobs to build these large structures. And so they'll calculate $100 million project is going to create 3,500 jobs, something like that. And so that project itself can satisfy X number of investors. And so To make a long story short, we just work with the project to get that data and get you through. That's how it works. If you don't do it that way, you do it through your own investment. And you can just invest like you would into your own business. The investment amount is minimum $800,000 if it's in a higher unemployment or a rural area. If it's in a more lucrative area or a higher end area, the minimum is $1,050,000. And you still have to create 10 jobs and you have to hire those people personally. So that's the difference. For regional center, you're not responsible for the hiring. The project takes care of that. For your own business, you are.